This is Cashology by FMBO, a podcast devoted to the art and science of managing your money. It's like school, but your only homework is living your best financial life. Class is now in session. Credit cards. Convenient for sure, and a quick way to build good credit if you use them wisely and pay your credit card bill on time every month. And that's why we want to talk about it today. Understanding credit cards, picking a good one for the way you want to use it, and managing it right, rather than letting it manage you. We're calling this episode Credit Card 101, and it's a great topic for anyone starting off with credit cards, or who just wants to learn more about how to manage the credit cards they already have in their wallet. Welcome, and thanks for listening to the Cashology podcast, hosted by your guide on the path to financial savvy, me, Julie Wyans. Our guest today is Dustin Elkins, a customer care personal banker at FMBO. Hi, Dustin.
Hi, Julie. Thank you for having me.
We are so excited to have you and learn from you about credit cards. I want to know first, though, what does a customer care personal banker do?
Yeah, absolutely. The customer care personal bankers work through our contact centers at FMBO. So we are actually bankers that are on our phones in the call center. So we're answering calls from customers looking to open up new checking, savings accounts. We also even do personal loans, our auto loans, and even equity products over the phone with our customers too. So it's a good, different way to come about banking with us.
Excellent. So you know a lot about credit cards.
Absolutely. Yeah. I started out in our customer care center as a specialist in our credit card division. And so, I definitely started out with credit cards with FMBO.
I think we both can agree based on both of our experiences, both having credit cards and talking with customers about them, they can be a confusing product.
Absolutely. Yeah. You have to be careful sometimes with the cards you get because they can come with certain fees, or even a higher interest rate. You do have to be informed to make a good decision sometimes, unfortunately, to not get caught.
Definitely. And that's why we're here. So I want to start off with just defining what a credit card is. Basically, a credit card allows you a line of credit given by a bank. So every time you make a purchase on the credit card, you're essentially borrowing money from the bank to cover the purchase. And then you have to pay that money back, right? And when your statement comes, you can either pay it in full or pay for it over time. If you pay for it over time and pay partially, you will incur interest. And paying the minimum payment every month might be an expensive option because you will incur more interest, right? So the goal is to pay off your credit card in full, not go over the amount of dollars you can pay back. So, Dustin, knowing this, tell me, what are the benefits of having a credit card?
Yeah, definitely. So there are a lot of benefits to having a credit card. If you use the credit card well, you can definitely get some good positives from that card. It helps you build your credit score. To have a credit score, you do need to have some type of credit account. And once you do have some type of credit product, you get a score, and this score does kind of follow you. So responsible credit card use can help build you a good score. And if you have a good score, you get better rates on things in the future, like loans, even on different credit cards you get. And having a good credit score absolutely does kind of help you just save money on interest with your cards and loans. Credit cards can also offer things like special financing on bigger purchases or even rewards back.
So with a credit card, it is an extension of credit from a bank, which means a bank or a credit card issuer thought that you were credit worthy enough to receive a line of credit from them, which means future issuers or banks will look fondly upon that, especially if your credit score indicates you are managing it well. You do manage your finances. You understand that you have to pay back what you spend. And that's why it's really important to build credit and responsibly use those credit cards. Dustin, you had mentioned rewards, and obviously we just talked about building credit. Tell me really quick though, we can't do that with a debit card, right?
Correct, right. Debit cards are a little different than a credit card. A debit card is actually attached to your checking account. And so with your debit card, when you make a purchase, the fund is basically coming from your checking account at that point. Some banks do offer overdraft services to allow you to kind of borrow from them certain amounts, but it's still different than a credit card in that situation. When you're using your debit card, it's basically coming out of money that you have. Whereas a credit card, like you mentioned earlier, is you're borrowing from the bank to make that purchase instead.
So let's talk about purchases. I mentioned paying your balance off in full every month. But if you make partial credits, you incur interest. I mean, how does that work? And what should I scope out when it comes to a low interest credit card?
Yeah, absolutely. Ideally, you always pay off the statement balance on your card. Obviously, sometimes that can't happen. If you do pay if you do pay that minimum payment, it will take you longer to pay off that balance. And if you do only pay that minimum, depending on the interest rate on that credit card, the amount you're going to have to pay to the bank to pay off that card is going to just kind of grow as that interest rate is adding more to your balance because you're carrying that balance rather than paying it off in full. So it's always better to get a lower interest rate just because if you think you may carry a balance on that card, it would save you money to get a lower interest rate.
So interest rate, also known as it's APR, right? When you're looking at the terms of a credit card, there are two ways of looking at that. One is your ongoing APR, or there's also some credit cards that offer an introductory APR, which means that for the first 6 billing cycles or first 3 billing cycles of having that credit card, the offer is a 0% APR or a low APR. And in that instance, you could purchase larger items and not have that interest ongoing. But then an ongoing APR could be low as well, but you really need to take into consideration what your APR will be when you initially apply and are approved for the card. But then also 2 years from now, what will that APR be on purchases?
Right, exactly. And a lot of cards do offer a promotional offer, like you said, for a 0% for 6 months or 3 months. Those are great because you can make a bigger purchase or any purchase you're wanting to and save some money on interest. Just one thing you mentioned too, it's really important to watch for what the interest rate will be after your introductory offer is over. When you do a credit application, they will provide you with the card terms, and in the terms, it'll show you the APR after any promotional terms. And it's definitely important to watch for that because once that promotional term expires, then the balance left on that card will be subject to that interest rate. And sometimes that can be up to as high as a 29.99%.
Since we're talking about interest, I think it would be good for us to talk also about other fees associated with a credit card. So what else should we look out for, Dustin?
Yeah, absolutely. For fees on a credit card, you can kind of depend on the card issuer, truthfully, for the fees that you have on there. A lot of cards will offer like a balance transfer offer with the original approval of the card. Many of those cards come with a 5% balance transfer fee, for example. So you have to factor in, you may be balancing or you may be transferring that balance at a lower interest rate. But if you're adding a large fee on top of that, it may not be worth your time or money to kind of do that. And, some other fees too to look out for is like cash advance fees. Those fees can be pretty big on a lot of cards if you're taking cash out of your credit card at an ATM. And just, your other normal fees like late fees and minimum interest charges that you could see for possibly paying late.
And there are some cards that do charge an annual fee, meaning every year that you have the credit card, you are charged a certain dollar amount to hold that credit card and be extended that line of credit and also likely earn rewards associated with it. So speaking of rewards, Dustin, I'd really like to learn more about what kind of credit cards are out there. I mean, there are thousands of products to choose from. How do we get started in making a decision?
Right. Yeah, there absolutely are a lot of card options out there that offer a lot of different perks. A lot of cards are kind of geared towards specific stores. A lot of stores will offer their credit card. If you make a bigger purchase with that store, they'll offer like a 6-month no financing on purchases over a certain amount. And so it's really just kind of looking for buying power. And so, when you're applying for a credit card, you really want to make sure that it's for something that you're wanting to purchase and that it's something that is going to hopefully provide you a good perk to buying that product. An example being a lot of furniture stores offer certain cards. If you purchase over a certain amount, then you can get that at a certain 0% interest rate for a certain period. And you also want to look out for in the card for like fees. And then you can even look into like how that bank specifically can help or how they will approve you for that card too, because some banks will have different approval conditions. They may look for a higher credit score or a lower credit score. And, every time you apply for a credit product, it's always best to make sure that you have a good chance of getting approved, because anytime you apply for a credit product, that's something that does get reported to your credit bureaus as well. And that's something that'll kind of follow your credit score too. And that's something that lenders will look at when assessing like your rate and your risk to find your APR, for example.
Really great point. So if you do apply for a credit card, there is a hard inquiry on your credit profile to see if you are credit worthy. As we talked about earlier, I think that's a really great point to make. And you had mentioned, a furniture store making big purchases. One of the more popular methods of obtaining a credit card is through your favorite travel brand, an airline, a hotel. Those often have large bonuses when you apply and are approved and spend a certain amount. So there's certainly that type of card. There's pretty much a credit card for any type of need you want, a cashback card for your everyday purchases. And I think the one thing that I really want to note is that often there is a trade-off with the card. If it has a high rewards earn, so meaning you get a lot of points for every dollar you spend, it likely will not have a very low interest rate. So it's very important to look at the product overall to make sure that you're getting what you want out of the credit card.
Yeah, absolutely. There definitely are trade-offs with credit cards. I know, just as a general idea, rewards cards, like you mentioned, they will give you a nice certain percentage back on certain purchases or even all purchases. But a lot of times with those cards, they do come with like a hefty annual fee. So you could even take a look at how much you're spending on that card and see how much you're getting back in rewards, just to make sure that that annual fee isn't kind of offsetting what you're getting for the rewards on the card. There definitely are cards out there that have very high annual fees that can offset the rewards you get from that card, even if it's, travel benefits or just cash back for that.
Completely. And it's very normal for someone to have multiple credit cards and use different ones for different purchases. And that's why I'm glad we talked today about managing credit cards, because it can be overwhelming and you could feel like the marketing for credit cards is enticing, but really just understand that you need to apply for a product that makes sense for you, whether it be rewards, low interest rate. There is a credit card out there for everyone. So, Dustin, any other pieces of advice that you'd like to give to our listeners?
I always just think it's very important to be an informed consumer when you take out any credit products. You definitely don't want to have any surprises come up later on. Unfortunately, if you do make a mistake on your credit, sometimes that gets reported to the bureaus and it can follow you for a bit and kind of impact you for a few years, truthfully. So I just think it's very important to always just be really informed when you're making credit decisions. If you're ever feeling rushed into it or anything, I always think it's a good time just to take a step back and look at what you're agreeing to, because it is an obligation that you'll have to watch for. But they can definitely be a really good thing to help you make larger purchases and save money over time by not paying interest with promotional purchases or, just getting nice rewards back or even miles.
Really great. Well, Dustin, you've been an excellent guest. We really appreciate you sharing your knowledge with us.
Of course, and it was fantastic. Thank you for having me.
For more information on credit card offers we have available, go to fmbo.com. Thank you everyone for listening. Don't forget to subscribe and keep an eye out for more Cashology episodes coming your way soon. Member FDIC, Equal Housing Lender. Podcasts are for informational purposes only and not intended to provide specific advice or recommendations. When making decisions about your financial situation, consult a financial professional for advice. Podcasts are not regularly updated, and information may become outdated. Deposit products are offered by First National Bank of Omaha, member FDIC. Investment products are not FDIC insured. Not a deposit or other obligation of the bank. Not insured by any federal government agency. Not guaranteed by the bank. May lose value. The Cashology Podcast. Copyright 2020. First National Bank of Omaha.